All right, traders, we're going over the next GameStop. We're going over the next AMC because I'm telling you, this is the next short squeeze. Mark my words, this is the real deal. I found a product. This company has a product, disruptive tech. There's big money getting behind them. They're pretty new to the scene. They came to the scene, IPO'd in November. They have massive room for growth, and their competitors are killing it. I'm telling you, they have changed the game. They've changed the way that you can do car insurance. They've changed the way that you can get quotes, and they break the barriers of racism and discrimination when it comes to this specific field. This could be a $70 to $60 stock, give or take, over the next few months. The company is Root Insurance, ticker symbol ROOT. I'm telling you, big stuff is coming on this stock. Before we get into the content, I need you to do two things and two things only. Hit that thumbs up down below because I want as many people as possible to see the potential in this play, and make sure you hit the subscribe button as well because I'm posting videos every single day about the stocks that I love and the stocks that I think will make me money. Let's not waste any more time. Let's get to it. So the first thing we're going to do is cover who Root is. Now, this company, like I said, they directly speak to me because their business model is built around advertising to millennials. I love data. I love the advertising and marketing type of space. And I love the way their company is structured. So they started as a car insurance company, went into renter's insurance and then homeowner's insurance as well. But car insurance is really where they made a name for themselves. Traditional insurance looks like this. This orange represents your actual driving behavior. This is Root's model, right? This is the whole structure, everything that goes into it. Now, this is a larger portion that actually relates to your driving behavior. This is interesting because traditional insurance has been considered racist. It goes against gender, ageism, as well as other concepts that go with that. So that's something I want to focus on here. That Root, what they do is they allow you to take this driving test that on their app, and this kind of structures and rates you as a driver. And they'll give you a quote based on that driving experience and the test that you took, along with these other factors. Now, there's other factors that play into this as well. They don't eliminate them all. They just minimize them and create a greater area for your driving behavior. This is very interesting, and they're the only person on the market that does something like this. And that's what kind of gives them a great amount of separation. Now, the company I mentioned was Lemonade. Now, Lemonade, if you want to go take a quick look at their stock chart, I just want to do this really quick. So Lemonade is about worth $92 a share. Root currently is worth $13 a share. We're going to get more into this here in a sec. I don't want to focus on that yet. So that's just something to take into account for now. Now, they're getting into the other sectors. Renter's insurance is a very big, topic and area as well, but I believe they can focus and hone in on this car insurance model that they'll just automatically attract those same customers to lump sum all their insurance together, because the insurance is very cheap as well, and it's very competitive when it comes to these other markets. So there's a few things that we can look at when it comes to Root. We can look at a few other things. We can look at the driving test. We just went over that. It goes over your marriage status, stuff like that. We don't need to focus too much there. And is what type of drivers drive with Root. Now, this speaks, like I said, specifically to the younger generation, because that's who they're advertising to. And that's why Lemonade did so well, is because they're advertising specifically to younger individuals, because these are people that really suffer from these high rates and they don't really make that much money yet, right? So that's a pretty big factor to take into account, and that's what I love. And right now, yes, they're being heavily shorted, and this is a short squeeze stock. I want to emphasize that enough. This is a short squeeze potential stock. So we're going to get into that here in a sec. But as you see, they're only in about 29 states right now. They're not in all 50. They're just pretty new to the scene, and they have lots of room to go up. So that's what I want to focus on right here. So you can see that their cost basis premium against other people, doing very, very well, very affordable as well. So that's one thing I want to focus on. And then they're also doing specific things, again, focusing on the millennial, focus on the way trends are changing. So you can see that free roadside assistance included with every policy, the Lyft rides on specific holidays that are free. That's an actual really cool thing. Special premium discounts for Tesla drivers. So they're just making deals with other car providers as well. So that's another major thing that I want to focus on. So then I want to take a look at this. This represents the short interest on the stock right now. So right now what we're seeing is the short percent float, which is at 43.65%. Now we're seeing different numbers. Now, if you go to your typical highshortinterest.com, you can check this out to see some of the high shorted stocks that there are. Root represents right here. You can see they're at 41.66%. This is actually going up, and Market Watch does a pretty good job. Market beat, my bad. So they do a really good job at keeping this fairly up to date. So I want to focus on, and no one's Again, no one's talking about this. No one's really talking about this. Now, how this got brought to my attention, I was looking at some articles, and then I was looking at other insurance companies because I love Lemonade. And I was looking at other up-and-comers in this industry. Now, Andrew left. If you don't know who this is the guy that, is a serial shorter. He hates GameStop. He hates some of these other short squeeze talks. But he's the one that really started talking about this first. He said this is the most misunderstood stock available in the market. And he says this is his best stock of 2021, Root Insurance. Now, the big thing is that people don't understand what's going on. They don't understand how they're changing the game. They don't understand the disruptive tech that's coming in here. Now, he says about 42% of the company of the float of Root Insurance is short. Now, then they go down to the bottom. You can see a few days ago, S3 Partners calculated the short interest closer to 80% of the float, which would be massive amounts. Double what they're projecting right now, almost double. So let's say it's 75, give or take, if it's in that range. If these numbers get released, this will give massive room for growth and a huge spike on the stock price. We're not even into the charts yet, but look who's working with these guys. You got Tiger Global Management, Contu Management, Silver Lake Partners, Dragoneer Investment Groups. Silver Lake and Tiger are major investors, and they each put $250 million into this startup. And currently, they are down about 50% from the original IPO price at $27. So as we scroll out a little bit here, let's go to the one-day chart. So they got in about 27. That was the IPO price. So if we come back and we look at what he is saying there, it doesn't make sense for the investors to get out right now. They're not going to just lose 50% of their money in their first few months. And they're saying that people are going to get out. So this is what one of the short sellers are saying. This is not Andrew left. There's a lot of smart money that looks dumb right now. In 30 days, they're going to want to get out of this thing. It's been 30 days. They're not getting out. Left disagrees, calling Root a misunderstood short because they don't understand the potential. And if you look at the other stocks in this field, like I said, Lemonade, they have been on a pure uptrend. Now we have seen a downtrend since that Nasdaq drop, right? But they had an initial drop similar to what Root did, and now they are skyrocketing once the value is really there. And millennials are their number one customers, and they're going to be the number one consumers in America here in the next 10 to 15 years. So we need to take that into consideration when you're talking about investing. And then this is where he really gets me on board, because there's a possibility maybe that someone buys the tech or licenses the tech or takes the tech from them, right? That's always a possibility, and would send the stock skyrocketing. So the best tech funds in the world understand that the enterprise software aspect of this company, and that's the value of them. That's the value of why they're important. That's the value of what they're bringing to the table. That's the value of what differentiates them between everyone else in the market, because no one's doing what they're doing. And right now, everyone kind of thinks it's a failing system. It says the mission of Root Insurance is the traditional car insurance perpetuates economic and racial inequality in this country. Because statistically speaking, if you look at race, depending on your race, you're going to spend more on car insurance and insurance in general. Root has an ESG do good angle. It takes away the color of skin, what's your education, what's your credit score from your car insurance, and breaks it down to how good of a driver you are. This goes back down into the systematic racism that's currently going on in this country. And I don't want to go over any political views in this video, but they are addressing specifically that. And we look, a company with a mission typically does better. And it looks like they're actually trying to do good with what's going on. And then to finish the article on top left, goes on to say, even if Root only captures 2% of the market, it could be a $50 to $60 to $70 stock, adding that he leaves the technology issues to the experts. So this is pretty important. And could they fall? He goes on to say 100%. That's any company can fail. Any company can do it, but they're not going to fail tomorrow. Okay. They're not going to just start dropping. So let's look at this chart. Where are they at? They're getting absolutely destroyed. And we can talk about other stocks that have been heavily shorted as of lately. Okay. And I want to look at the cheddar flow option rate that's going on with them as well, and the order flow behind them. Now, I'm telling you, Root has a lot of potential. In my opinion, if we start getting above this range here, this is a longer term time frame, above this $15 to $14 range, this thing could start soaring. And what's going on here, we're seeing that local low. And like I said, with Lemonade, we saw something very similar. And we're going to see I'm telling you, I see some big movements coming here, and I've never been this excited about one of these short squeeze type plays, because what lines up is not just the manipulation and the shorts behind it. What lines up is that the company has value, that they have real tech, that they have something that nobody in the market has. They have a specific way of what they're doing, and I'm telling you, with the way that America is going, with all this police brutality and with the racism that's being exploited, not just with Black lives, with Asian lives and everything like that, Root has major potential, and I suspect the light will be shown on them very, very soon. So let's get into this chart. Let's get a little bit deeper into what's going on. Let's go into the 1 hour, 2 hour time frame. Let's go. Yeah, we'll use this one for now. So on the 2 hour time frame, we're looking at that local bottom right here. That local bottom. Okay. Let's look at the OBV as well. The OBV tells us a very bullish story. The OBV tells us there's buyers interested. The OBV tells us the downtrend is over, okay? So the OBV is actually higher than when we were at this $22 range, okay? At the $22 range, we were here. The on-balance volume is showing that people are buying and they are holding this, okay? It's being manipulated. We're being pushed down, but I believe, manipulation aside, the stock has value. That's the difference between GameStop, AMC, and Root. Root has value. Root has a specific audience that they're going after. Root has a differentiating viewpoint, right? Root has the money behind them, and they're very new to the scene. They haven't been around for years. So what I'm saying is, if we can get back above this 14.3, 14.5 range, there is tons of room to go. And honestly, I've been looking at it all day long. I've been talking with the Discord, and I think right now is going to be the time to pull the trigger for me personally. I think buying stock here, I like it a lot. Now, if I want to go the options route, because I want to get into the options here in a second, there is room to go up. Looking at the chart, the main thing we're looking at here is the price action, okay? And there's not too much price action to look at because we haven't broken that resistance. But if you look at the OBV, it looks extremely, it's the best it's been in its history. The OBV is extremely strong. It's showing that there is extreme interest on this stock. And let's take a look at the Cheddar Flow order flow. So this is the Cheddar Flow month of March option flow. So this shows all the major options that have been placed on this. As you can see, the rate here is a 0.3 ratio put to call. So 76% of the options put in here were on the call side, on the bullish side of things, right? They are betting the stock is going to go up, and this is a riskier type of play. They're betting heavy on Root doing well. Okay, this is where the money is flowing, and you can see the premium right here. So let me zoom you in a little bit more. So this right here represents the premium. This is how much they cost, and this is the date as well for when they expire. There is a lot of open interest for 4/16, April 16th, and then after that, it's going into June 18th. So those are the big days of where we're seeing the volume really kicking in here. Okay, so we have a few puts. These are the puts. They're going into June 18th, but in the short term, there is a large sentiment that we're going to see a lot of volume. We're seeing 200K, 300K, lots of volume flowing in here. Like I said, 0.3 ratio, when March was one of the more bearish and downtrending months on the whole Nasdaq, SPY, and then Dow, that's what we saw, a lot of downside in the middle of March, okay? But there was still a lot of sentiment, a lot of buying power coming in here of people loving Root. So that's what's pushing me to like what's going on here. Now, if I'm looking for options, I'm going to use that April 16th date for me personally. Do your own DD. This is not financial advice. Do your own due diligence. You're in charge of your own money. But what I'm saying is, I think we could see a move coming very soon. Now, long term, if you like the stock here, if you like getting into it, I do like the stock. I'd be comfortable holding a little bit of Root because they're a market disruptor, 1. The tech is real, 2. There's possibilities for an acquisition, 3. And then 4, they haven't even began growing. They're only in 29 out of 50 states. I'm telling you guys, this is one of the real deal. And just like Andrew Luff said, if they just tap into 2% of the market, they're sitting at about $60 to $70 worth a share of their stock price. That's absolutely insane. So if you want to go that route, you can as well. The options is definitely going to be a little bit more risky, but I like what I'm seeing here. I believe Root has a lot of stuff to bring to the table. I love what they're doing. You can expect more updates coming from me on this stock. Traders, I hope you got something out of this video. I hope I just shed some light on potentially one of the best plays coming to the market right now. Now, short term, I don't love the options, to be honest. If I'm playing this, I want to get some stock here for myself. I want to be able to hold this, sit on it, and then watch my money grow, because this could be a $20 stock in no time at all. Like I said, they have a product, they have heavy short interest. If those numbers come out that are correct, like Andrew Luff was going on about 70 to 80% short interest, this stock will absolutely soar. We saw Rocket Mortgage go through the roof because of short interest, and that was from hedge funds. That was not from retail. That was a hedge fund move. I believe we could see the same type of thing going on with this chart and with this stock, because they are not just some Reddit play. They have real value behind them as well. Look into the stock, do your own DD, but as you look into them, I am almost positive you will feel very strongly about the future of this company. Have a good one, boys. Namaste.